Good morning, guys. It's working, bringing a quick update on Bitcoin. Hope you guys are having a wonderful morning. Hope you had a good weekend as well, guys. Apologize I didn't update you guys yesterday on Bitcoin, but I had to have some family time. I get too consumed with trading sometimes. It gets a little annoying for my family, so you gotta have priorities, guys. You gotta cut out some time for the family every now and then. But I'm back in the saddle today, guys, ready to kick some butt, make some take some names, and make some money. And hopefully you guys can do the same. We're looking at Bitcoin to the US dollar 4-hour chart on Bitfinex, guys. And last time we spoke, I think Bitcoin was sitting somewhere in this area, about 6350, somewhere thereabouts, guys. I told you it looked as though we were beginning to enter a wedge pattern. I do think that's in fact what we are in. We've got a very clear ascending support line here that's been tested numerous times, guys, and we do have a very what appears to be a descending resistance line. It's only been tested twice, guys, but we do have a series of lower highs, higher lows, creating technically a wedge pattern. And as we approach the apex, guys, we know that a breakout becomes more and more likely. We're not quite near the apex yet, but it does look like that's the way it's playing out. Now, the zone to the upside that we clearly have to take out, that I've been screaming from the rooftops for the last 3 days, is this zone here. Breaking decisively above 6540. It's been tested numerous times, tested here, again rejected. We've got to get above this prior candle's high. It sits around 6640, somewhere thereabouts, guys. If we can take that out, I do think it's going to be a very quick rise, possibly finding resistance at 6750, guys. That is the neckline of the inverse head and shoulders. So I do expect to find some resistance there, but if we can break that area, which I do think a decisive break may do, if we can break that area, guys, I think more than likely we're going to come into this zone here, at least 7,000, somewhere thereabouts, guys, and that's going to be a lot of strong resistance as well. If we can break above 7,100, guys, I think that then it may be off to the races, but we'll have to wait and see how that ends up playing out. For now, we are entering this wedge position, guys, and as I've told you guys in the past, my most successful trading strategy is trading within a wedge, knowing that a breakout is coming sooner or later. We're getting confirmation that a breakout may be coming. If we come here and we look at our, let me get over to the, there we go. This is on the 4-hour chart. We look at our 4-hour moving average and exponential moving averages. We can see that and our Bollinger Bands, we can see our Bollinger Bands are starting to tighten. They're starting to bottleneck. Now, I'd like to see them bottleneck even more than they are now, but clearly that's exactly what they're doing. Tells me that more than likely, if this continues, we're going to see a breakout in the next 24 to 48 hours. To confirm that possible breakout, we're seeing, and this is what I've told you guys many times in the past as well, on the 4-hour chart, we need to see, excuse me, we need to see the EMAs and the moving averages converge on each other. We're starting to see that 55-day, 21-day, and 8-day moving averages are all converging on each other here, as you can see as I zoom in here. And we're also starting to see this 50-day moving average start to converge with those three as well. They're literally sitting almost on top of each other now. So that is a sign that we could see a larger move in the next 24 to 48 hours, somewhere thereabouts, guys. Now we are seeing price start to dip below this 21-day moving average, or excuse me, 21-day EMA. I would like to see price at least be able to stay above this 21-day EMA. If we break below it, that's a rather bearish sign, guys, but let's wait and see if this can hold. This may just be temporary. Right now it looks like it's acting as support. If we go to the daily chart, we can see on the daily, this 8-day EMA was broken above, but we've yet to have a daily candle open and close above the 8-day EMA. We had a candle close, close here, and then it opened, but then it was immediately rejected. So it didn't open and close. We had this candle close, this one opened, but immediately come right back down. So we have yet to have one candle on the daily chart open and close, and that is my criteria, just based on experience. My criteria for a short-term momentum towards the bulls in a bearish territory is the daily candle to open and close above the 8-day EMA, and on the 4-hour chart, at least a 4-hour candle that opens and closes above the 21-day EMA. Now, we've had that on the 4-hour, but we didn't have the confirmation with the daily. So we need both to have that confirmation. If we come in here and we look at short positions, guys, short positions are continuing to stack and continue to stay stacked and have for a while. Means retail investors are thinking this market is going to break down, go a lot lower. If we check our longs confirm that. We can see longs are continuing to drop and are just sitting down here in this level, guys, not really stacking at all. Again, retail investors expect this thing to go lower, which makes me think that the market makers, if I'm looking at it from a market maker's point of view, I'm going to want to go stop hunting and take out those short positions. So we might see price break above, Now, whether or not that's a real break or whether or not that's just a stop hunt, we'll have to wait and see. So how am I going to trade this, guys? Well, first let me point out the clear resistance, clear support and resistance areas. Clearly, we're trading within this zone here. In fact, let me go out to the daily because you can see it a little bit better. In fact, let me just point out the volume profile. If we look at our volume profile for the last month, going all the way back to July, what do we have? Just for this last month, where is majority? It's all right in this zone here. It's all right in that zone between 6540, the majority of it anyway, between 6540 and 6280. Oh, let me get right back over there. There we go. Right in this area, and we can see it right here. The majority of the volume is sitting right in here. The majority of buying and selling happens right in here. And sure enough, we've continued in this, and we've been in this zone for the most part since August 8th. Yes, we did break down, but it immediately came right back in this zone. Yes, we did break up briefly, immediately rejected right back into this zone. Okay, so that tells me that we've got to clear this zone. Once we do, more than likely we're going to get a snowball effect to the up or to the downside. To the downside, I think we're going to be coming down to at least 6,100 if it does break down, possibly lower than that. But that 6,100 is where it may find some support initially. We can see that on the 4-hour chart. That it did find support here in the past quite a bit. Now it did break through here, but I do still think that's a relevant zone. If that does break down, there's a bit of a supply zone right here. We've been about 6,000, between 6,000 and 5,980, somewhere thereabouts, guys, but that's very thin. There's a good chance if it breaks down, we're going to come down to 5,900 or 5,850 and test this zone, this prior low down here, which was sitting at around 6,856, somewhere thereabouts, guys. So I do think if price does break down, there's a good chance we'll come down here, but at least 6,100 in my opinion. To the upside, we've got to take out this prior candle, as I've told you before. That sits at 6,640, somewhere thereabouts. If we can take that out, guys, I do think there's a good chance we're going to come up here to at least 7,000. Now, 6,750 might act as a decent resistance. As I showed you, that's the inverse head and shoulder neckline. So yes, that might act as a good resistance, guys. But I do think if we can break through here with enough volume, and we should have a lot of volume coming through here in the next hour or so, after 9:30 Eastern Standard Time, I do think some volume can enter the market, guys. So I do think that it could push it up here to the upside. Now, how would we protect ourselves against bulls and bears traps? As I've showed you guys in the past, to the upside, if you are going to take a long position, I would have my shorts down here at this prior candle, just below this prior candle at about 6195, somewhere thereabouts, guys, at least on Bitfinex, whatever this prior candle is on your exchange. That's how I would put it, just below that, because if they do break it down, if this is a bear trap, then market makers are going to break price down, probably right up to this zone, hoping to liquidate a bunch of shorts and then bring price right back up. To the upside, if I'm going to go long, where would I put my, or excuse me, if I'm going, that's what I would do if I'm going to go long. That's where my stop loss would be if I'm going to go long. If I'm going to go short, I would have my stop loss right above this candle here. So right above 6640 is this candle. So I'd have my stop loss at 6650, 6655, 6660, somewhere thereabouts is where I'd have my stop loss. Because if they do end up bringing this thing up, everyone thinking that price is going to continue to the upside, trap everybody high, hit that zone, and they'll come right back down again to go stop hunting, guys. So protect yourself both ways. At least put your stops above this candle if you're going short, above this prior candle if you're going long. Now, how would I play this? Personally, I love to play wedges, guys. So in my opinion, what would I do as far as a short? If I wanted to play a quick scalp trade, I'd have some buy orders sitting up in here, right about 6590, 6580, somewhere thereabouts, the top of this wedge. Expecting it to come up, scalp a quick short, possibly up top here, coming right back down here. Now, knowing that it could be a breakout, knowing that I could get liquidated, guys, but you know that's the risk that we all take. If we get stopped out, we get stopped out. It's a decent area to play a quick scalp trade if you're going to short. For a long, I would have my buy order sitting down here at about 6350, 6355, bottom of this wedge. Again, expecting the price to come up, possibly continue back into this zone and play a quick scalp trade and get out somewhere in this area. But again, guys, those are just very small, very quick scalp trades. I can do those all day long. As it gets closer to the apex of this wedge, guys, and we may break out long before the apex of this wedge, but where I get my most successful trades are closer to the apex of this wedge. So probably in the next 12 to 24 hours, if we have not broken out, I'm going to get very interested in playing this trade, guys. And how am I going to do it? I'm going to have my stop losses exactly where I had or where I told you. And what will I do? I will enter a long position somewhere at the bottom of this wedge, hoping that it gets filled. I will enter a short position somewhere at the top of this wedge, hoping that it gets filled. Hopefully what ends up happening is I end up getting back in the center here in both a long and a short position with my stop losses in place. Okay, so I'm expecting a break, and then at that point I'm in a long and a short, and I'm expecting a breakout to one direction or another. Okay, once price does end up breaking out, of course my other position will get liquidated, and then I'll ride the whatever position it is. If it's a long, I'll ride my long all the way up, expecting to target about 7,000 to the downside. I'll ride the short all the way down and expect to target about 6,100. Excuse me. Now, where that gets interesting is how you manage your stop losses. So initially, I'd have my stop losses exactly where I told you. If price does end up breaking up, the second it breaks up out of this, I would move my long position, my stop loss on my long position. I'd move it up to at least 6,300 the second it breaks up out of here. Why do I do that? Because if it is a bear trap, it'll more than likely come up here. My short will not get liquidated because I put my stop loss back long enough to prevent getting liquidated in a bear trap, and it's going to come right back down. So if it does end up breaking right back down, that tells you that okay, we are in fact in a bear trap. My shorts have already been increased, or my stop loss has already been increased from my long position, and I can ride my short all the way down. And when my long gets liquidated, I'm still in profit. Okay. But you've got to be on top of that trade. You've got to be ready for the second this thing breaks out, and you've got to be quick. Okay. Now to the downside, so that means setting up alerts clearly unless you're sitting at the computer screen like a dork, which I do sometimes. Okay. To the downside, if it does end up breaking down, what do? I immediately put my stop loss on my short. I immediately move my stop loss down here to somewhere around 6,500. That way, no matter what, I'm going to be in profit. And if this is in fact a bear trap and price does end up bouncing and coming right back up, my long won't get liquidated because what did I do? I put my stop back short enough to prevent getting liquidated in a bear trap, more than likely. Again, this is assuming that the market makers move things in the direction that we assume. If that happens, what happens? Well, I come up, my short gets liquidated here because I moved my stop, which is still in profit, and then it continues to the upside, and I ride my long all the way up. So that's kind of my trading strategy with the wedge. But again, I need to see it get closer to the apex before I get comfortable doing that kind of strategy. Until then, quick scalp trades right at the top and the bottom of this ascending and descending support resistance lines, and just quick scalps coming back in the middle. That's the best way to play this until we get a decisive break in one direction or another. If we look at our MACD, we can see that this is sitting here this is on the 4-hour. MACD is just moving sideways, guys. You rarely see this. It's just literally moving sideways, guys, giving us no real indication of a direction at all. So we should get a break in one direction. That, again, confirms that more than likely we're going to get a break in one direction or another in the next 24 to 48 hours. If we look at the daily MACD, we're getting a similar thing. Looks like the MACD line's about to cross above the signal line, guys. It looks like the histogram might be getting ready to cross into bullish territory, but we don't see it yet. It's kind of moving more sideways. This isn't really a vertical move up. It's more of a sideways kind of flattening out, guys. So again, not really giving much indication of which direction this is going to go. If we look at the daily stock RSI is sitting just in overbought territory, testing a possible breakdown, but the 4-hour kind of gives us more of a neutral look as well. The RSI is giving us no indication one way or another, guys. So this could truly break in one direction or another, guys. But I do think that it's going to happen in the next 24 to 48 hours, and I do think the move could be significant. And it doesn't mean it has to happen. And if I'm wrong, and if I get liquidated, and if I get stopped out in either direction, so be it, guys. That's part of trading. And if you don't take any risk, you can't get any reward, guys. But this has been in the past a very successful trading strategy for me. And if we get closer to the apex here in the next 12 to 24 hours, I'm more than likely going to play it. In the meantime, little scalp trades here and there, I'll be happy with those. So anyway, guys, I'm going to go ahead and wrap it there. If you have any comments, questions, suggestions, please let me know in the comment section below. And as always, guys, I certainly appreciate an upvote or a re-steam or a like, depending on where you're viewing this. Just lets me know you want me to continue to do these videos. Until next time, guys, please trade safe. And by trade safe, somebody asked me that, by the way. What do you mean? Why do you always sign off and say trade safe? When I say trade safe, I mean have your stop losses in order. Don't trade or don't risk more than you can afford to lose, yada, 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 all the typical things, guys. So I just sum it up by saying trade safe. Don't be foolish with your money, guys. Value your money and your money will value you. That's just my personal opinion. So anyway, guys, trade safe. This is working. Signing out.